Happy Valentine's Day, everyone. And for all you fellas out there, make sure to take care of that special someone in your life. Remember, chocolates are fine, but diamonds are better. Let's get to how you're going to pay for it. The equities markets did get off to a strong start this week after a fairly rough time last week, bolstered by strong economic data and some reassuring words by the Federal Reserve. The S&P 500 closed to 1,829 points, and the Nasdaq gained nearly 1%, closing at 4,240. The Dow Jones managed to cross over a psychological threshold by eclipsing the 16,000 mark and closing up 0.40%. However, the Dow still remains the laggard of the major indices, which is down more than 2.5% year to date. Canadian markets also gained this week, even amid a mixed slate of earning reports. The TSX shot up over 100 points to close at 14,001, up 0.73%, and the TSX Venture Exchange also closed up, gaining 4.72 points to close at 986. Enthusiasm was quite high this week as we finally got some good news out of China with new economic data that could potentially reverse bearish trends. And the newly appointed Fed Chair Janet Yellen gave a statement which was perceived by market participants to be confident and reaffirming. All of this has been fueling market strength. The dichotomy, though, continues to present itself between equity valuations and the real economy. According to the latest data from Harvard Analytics, domestic retail sales for the month of January dropped 0.4%, well below even December's poor results. While much of the decline in consumer demand could be explained by the recent storms that are affecting the East Coast, the divergence is nonetheless worrying, and investors should continue to remain vigilant. Over to currencies. The overall market action for the US dollar index was relatively muted, with the greenback trading in a very tight range throughout most of this week, with Thursday's session closing at 80.29. The action on the dollar-yen was somewhat choppy, although upside momentum was notably capped following Janet Yellen's first official statement as Fed chair. The yen closed Thursday at 102.16 after another volatile trading day. The euro-dollar pair took a sizable dip midweek after a European Central Bank executive board member stated that imposing a negative deposit rate was a possible option to induce further liquidity in the Eurozone region. However, Thursday's price action recovered previous losses as traders anticipate for the release of GDP data on Friday. Now over to winners and losers and our picks for the week. The winner for this week is Packaging Corporation of America, ticker symbol PKG. Packaging Corporation rode the bullish momentum swing of the underlying equities market this week, punctuated by a 10% move on Wednesday after an earnings report beat estimates by 15 cents per share. The company also reported record-level sales in the fourth quarter, along with significantly increased volume in December, lending some credence to a potential improvement in the domestic business environment. The loser for this week is IMAX Corporation, ticker symbol IMAX. Ever since IMAX was featured on Money Magazine's investment guide for 2014, shares have declined more than 12%. Despite company guidance where profits are anticipated to grow 45% this year and 23% annually for the next several years, IMAX has had trouble making inroads to the burgeoning Chinese market, thus increasing the dependency of the firm's main movie business to the quality of Hollywood content. Well, those are our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. That's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and a snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. On Monday, markets are closed in the U.S., but Tuesday has Coca-Cola out with an EPS forecast of 46 cents. On Wednesday, Safeway Inc. has an EPS estimate of 50 cents for December, the month when the grocery chain announced a comprehensive initiative to make its online grocery shopping website more accessible and usable for Safeway shoppers with visual impairments. And on Thursday, Crocs Inc. with an EPS estimate which calls for a loss of 21 cents. Apparently people aren't buying up the ugly shoe trend anymore. Last month, the Colorado-based company closed the previously announced investment from a fund affiliated with Blackstone to purchase $200 million of newly issued Series A convertible preferred stock. Checking in on Canadian stocks to watch next week. On Tuesday, Can-Am Group has an EPS estimate of 24 cents, compared to 18 cents in the prior year quarter. The Quebec-based company announced last month the acquisition of 66% interest in an engineering firm that specializes in wood structures. On Wednesday, equipment company Finning International Inc. has an EPS estimate of 54 cents, compared to 55 cents in the prior year quarter. Finning achieved labor peace late last year, signing a new 3-year deal with the International Association of Machinists and Aerospace Workers. And on Thursday, Loblaw Companies Limited has an EPS estimate of 56 cents, compared to 64 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News, Cross the Street and BayStreet.ca, I'm Hannah Bernard.